Get Rich Education is brought to you by Ridge Lending Group, Apartment Investor Mastery, Norado Real Estate, and Producers Wealth.
You're listening to the show that has created more passive income for people than nearly any show in the world. This is the powerful Get Rich Education.
Welcome to GRE, from Queensland, Australia to Queens, New York, and across 188 nations worldwide. I'm Keith Weinhold, and this is Get Rich Education, episode number 200, the Bicentennial Installment. More on that later. Now, as a real estate investor, over the long term, during an up market cycle like we're in now, you're enjoying appreciation and leverage and arbitrage. And with that leverage appreciation, you're able to perform more cash out refinances and 1031 exchanges in order to increase your returns and achieve a high velocity of money. In a down real estate market cycle, you're then just kind of using the rental income to control the mortgage. You might even have more cash flow during a down market cycle, and that's partly because of psychology. More people are discouraged from buying their own home in a down market. Fewer people buy homes and more people rent homes in that case, and your rental demand goes up, like I started experiencing in 2008. So if you can buy right, you're often hedged both ways in an up market cycle and in a down market cycle. And over the long haul, the fact that leverage beats compound interest might have other people say something like this to you because you're really financially and lifestyle-wise separating yourself from everyone else. You know what they're going to tell you? They're going to say, gosh, you know what? You live a great life. Whether your peers see you in real life or virtually through pixels in social media, they'll see your freedom of time. They'll see that you're traveling to the shore again for the weekend and vacationing your way through German castles. They'll see that you've got the freedom of time to exercise and have shapely shoulders and a tapered waist or whatever you want from your freedom. I know that you're going to hear that once in a while. And you know why I know that? It's because people tell me that I live a great life. And you know what? When someone tells me that I have a great life, well, I mean, I am appreciative that they've just said that. But you know what else really? On some level, I'm confused that someone just told me that I have a great life. And you know why that is? Because look, who is living a great life up to? It's up to you. So therefore, it's a choice. So therefore, why don't they just choose to live a great life? So you really ought to be confused when someone tells you that you have a great life. I mean, why would a person choose anything else? Now, I actually don't hear that whole you have a great life thing from people all that often anymore. And you know why that is? It's because I continually hang around other people that might have even greater lives than me. Because if there's one governor on you living a great life, one thing that you can control, it's surrounding yourself with people that do like you and therefore do support you. If you're hanging out with three dudes that say, oh gosh, we're never going to get out of this small town, dude, what are you talking about that you're going to build a national or an international real estate empire? What are you talking about how you're going to live wherever you want to live? Make money follow you instead of you following money. You're not going to do that. You're going to work at the factory just like the three of us and just like our dads did, and we're all just going to end up dying here in this small town. Well, gosh, they're not living a life that's aspirational, and they're sure not going to inspire you. You can control this. You can choose better. And it really comes down to your why. Your why in life is important because if you don't know why, you don't care about how. Next week, our show is going to go back to a more tactical how, but today we're going to be doing some talking about the why here. I mean, why care about investing at all? Well, look, money doesn't make you happy, but it sure gives you time to figure out what does make you happy. And I want you to be real with me right now. It seems like in society, people are afraid to fully say that they really want something aspirational. All they do is they give you their altruistic side of their why. Well, I invest in real estate because I want to provide others with good housing. Okay, that's something, that's a start. Maybe you want to feed and clothe 10,000 Somalians. Okay, that's a nice why, but come on, give me a selfish why once in a while. It's okay to do that and give a selfish why. I mean, look, live well and give well. That's a great mantra for life, in my opinion. Live well is your selfish why, and give well is your altruistic why. Tell me your unvarnished, selfish why, and do it in the my kid is not the cutest vein, okay? My kid really is not the cutest kind of honesty. One of my selfish whys is that I want to travel well and see the world. I just bought a trip so that next month my wife and I can spend half of September touring Italy and Switzerland. Yep, that's my selfish why. I bought a tour to see it all. The Roman Colosseum, canals of Venice, ruins of Pompeii, taking a boat out into the Mediterranean to see Italian islands, go see the countryside in Tuscany, Florence, and then see the Swiss Alps, and do it all in a high-end way. It's not backpacking through Europe. Some people, like the three guys in the factory town, will even try to hold you down. They're not just a bad influence, but they'll try to hold you down. And to them, if you told them about some grandiose vacation like I just described that you planned, that might even seem arrogant to them. Like that's how far removed they are from even trying. Well, sincere humility is great, but I prefer honest arrogance over false humility. Don't pretend that you're not scared to try to do something different so that you can live better and give better too. But give me your selfish why for a change. I think that can be quite clarifying for you. It can be a cathartic process for you. And here's the thing, you know what? Even though I just publicly admitted a fairly selfish why of mine, you know what? When you go take a trip like this, you might not even be thinking about this, but that is the kind of thing that can inspire other people. So even though the intent is more in doing something for myself, one byproduct is that you are actually giving people a lot of inspiration with that act as well. You got to remember why we're doing this. Real estate investing is not the thing. Real estate investing only fuels the thing, whatever that thing is for you. I say, don't quit your daydream. You've got to live your daydream. No one else can live that for you. In fact, you need to die with memories and not dreams. Don't die with dreams, die with memories. And you know what? Most people don't die with either memories or dreams. That's because they let their dream die so long ago that they don't even remember what that dream was anymore. And then they never opened up the free time to even build up more than 1/10 of the memories throughout their lifetime that they could have. Come on. Yes, it's an important mission here at Get Rich Education to do the right thing, to provide good housing. Don't cut corners. Don't be dishonest. But you're in this for the income too. Have your catharsis if you need to. It's okay. And if an investment doesn't produce income outside of a capital gain, either now or soon, well, you're probably not interested in it, and I'm probably not interested in it. The best advice might actually be to keep major goals and these fulfillment items that you have off of your bucket list. Keep them off of your bucket list completely. I really don't even like that term, bucket list, but the best way of accomplishing things and not deferring life, say for something like travel, when you want to go somewhere is rather than adding it to some list, just go directly to Travelocity.com or Kayak.com or Colette Travel or wherever and just book the trip. Go and do beats wait and see all day. The three guys stuck in the factory town holding you down, they're not ever going to Venice for a few weeks, okay? They refused to think differently. They refused to keep migrating to a better and higher use. They're telling you that you live a great life. When it's a choice for every reason, then they should live one too. You know something? The rest of my life, I know that I'll never again paint a wall. Okay, that is so far away from my best and highest use. I might never mow a lawn again either. Yes, you could listen to a podcast and paint a wall. Nope, listen to a podcast while you're running or exercising. Best and highest use. That's because you can outsource painting a wall or mowing a lawn to somebody else. Hordes of people are willing to do that mundane stuff for you and trade their time for dollars, sell their time for money. That's a business that you probably want to gradually taper out of if you're not there already. You see, successful people exercise and travel in great places because working out and traveling to great places are two activities that you can't outsource. And sometimes you might wish you could outsource exercise to someone else, but you can't. Maybe as close as you can get is hiring a personal trainer to come in alongside you. I do that on some days. Don't live below your means. Expand your means. Your 3 old buddies from the factory town, they're living below their means all their life. I mean, what does personal finance and education look like to them? Here's what it looks like to them. You might as well cue up the wacky carnival music because out in the garage, I've got my old dartboard and I'll bet I could get $12 on eBay for that if I take 20 minutes of my time to list it. And yeah, sure, my mom still pays my phone bill for me, but I chip in with chores over at my folks' place. I mean, if you're skipping latte to save $5 a day over even 5 years, how much do you think that is? That's only $10,000. So if that's your approach, not only are you broke, you're staying broke and you're being dumb. You don't shrink your way to a better lifestyle. Hey, I don't want to learn about leverage and arbitrage. 1031 exchange? You know, I reckon that I could just save money by taking part of my weekend to change the motor oil in the family station wagon all by myself. Oh, I've got an idea. The family and I can save a total of $6 on dinner tonight if we all stay home and make Kraft macaroni and cheese.
Since 2014, the powerful Get Rich Education podcast has created more passive income for people than nearly any other show in the world. This show teaches you how to earn strong returns from passive real estate investing in the best markets without losing your time being a flipper or landlord. Show host Keith Weinhold writes for both Forbes and Rich Dad Advisors and delivers a new show every week. Since 2014, there's been millions of listener downloads in 188 world nations. He has A-list show guests include top-selling personal finance author Robert Kiyosaki. Get Rich Education can be heard on every podcast platform, plus it has its own dedicated Apple and Android listener phone apps. Build wealth on the go with the Get Rich Education podcast. Sign up now for the Get Rich Education podcast or visit getricheducation.com.
Are you looking for a roadmap to financial freedom? If so, we have a solution for you. Narada Real Estate is offering a limited number of free strategy sessions to help you get out of the rat race. Learn how you can create wealth and build monthly passive income. To set up a time with one of our knowledgeable investment counselors, simply go to naradarealestate.com. That's NORADA realestate.com.
For an income property investor like you that needs an income property loan, go to Ridge Lending Group. And over the years, you've heard owner Chaley Ridge generously give her time to you right here on the show as a guest. Ridge provides investment property loans in almost every U.S. state, and you're going to find out how they've helped more Americans realize their dreams of financial freedom through real estate than any other mortgage lender in the entire nation when you get started at ridgelendinggroup.com. MC Laubscher is the host of the top-rated business and investing podcast, Cash Flow Ninja, and also the president of Producers Wealth. Producers Wealth assists people in creating, protecting, and perpetually multiplying wealth in any economy through creating processes that help them increase their production, provide them with liquidity, passive income generators, and opportunities for enormous growth. Learn more about their time-tested and proven systems at yourownbankingsystem.com.
This is Rich Dad, Poor Dad author Robert Kiyosaki. Listen to Get Rich Education with Keith Weinhold. Don't quit your daydream.
You're listening to the Bicentennial Installment of Get Rich Education, episode number 200. Now, since episode 100, you'll notice that I've removed my name from the show introduction here. I've done that to show you that you're not here for me, you're here for you. Some marketing-based guy told me that I should keep my name in there, but I didn't because you're not here for him either. And we've continued to have some top guests here on the last 100 shows, like T. Harv Eker, Robert Kiyosaki, Ted Benna, whom is the inventor of the 401k, Rich Dad real estate advisor Ken McElroy, and more. And we'll continue to have top guests on. But I heard your feedback loud and clear on one thing that we started doing over a year ago, and that is to bring you onto the show with me. Yes, we've started from time to time having an everyday listener like you come onto the show and just tell us how this show has changed your life. You've told me that you can really relate to those everyday listener stories because that's often a pretty close reflection of you. Learning from Ken McElroy is great, but you might have a hard time seeing yourself being like Kenny with his 10,000 plus rental units. Now, just in the past week or two, the U.S. reported a lot of its second quarter financial numbers. That signifies the end of the first half of this year. So let's start with GDP growth, the gross domestic product, which basically measures all of the stuff that we produce in a year. And 2 or 3% has been a common quarterly number reported over the last several years. But for Q2 of this year, it came in at a rosy 4.1% GDP growth. And I know one person that's definitely going to let you know when the economy is doing well is measured by GDP growth.
If it has a 4 in front of it, we're happy. If it has like a 3, but it's a 3.8, 3.9, 3.7, we're okay. But these are unthinkable numbers. If I would have used these numbers during the campaign, the fake news back there would have said he's exaggerating.
All right, there's our president always taking a shot at somebody. Well, a lot goes into the GDP, and you actually can pick apart that 4.1% number, and it might get revised downward later, but I think that you can safely say that by a lot of measures, the overall U.S. economy is doing pretty well right now. From a share price perspective, Amazon had an awesome quarter, and they just continue to be incredibly innovative and disruptive. Facebook has had a rougher time lately with more privacy and security concerns. They recently suffered the biggest one-day market cap loss in stock market history. Stocks can get so disconnected with reality, and a lot of times they're not a reflection of what's going on in the economy. A company can have a great-looking quarter and even report strong quarterly earnings, but then it can still go down right after a strong quarterly earnings report comes out. And why in the heck is that? Well, that's because of strong earnings that still fell short of analyst expectations. And just to draw a real estate investing parallel for you here, in the corporate world, earnings mean profit. It's the money a company makes. It's simply that. And that's seen as the most important indicator of a company's financial health, their earnings. Earnings reports are released 4 times a year, and they're followed very closely by Wall Street people, and they're typically released a few weeks after a quarter ends. Earnings is that net amount earned. And because it's net, in your rental property, you can think of earnings as your cash flow. You can also think of corporate earnings or your property's cash flow as your bottom line, since it's net of expenses. And in company language, revenue is the name for the top line term. The top line is gross income. And in real estate vocab, you can think of your top line as your gross rent income before any expenses are taken out at all, the amount of that income check that your tenant writes. So with the economy performing pretty well by conventional measures, let's look at where other asset values are today. Let's do a little whip around the asset space here, since we're on milestone episode number 200 and we kind of look back a little bit. Year-to-date, real estate is up in most U.S. metros, and it's up in most Case-Shiller 20 metros, although on an inflation-adjusted basis, which is the way that you need to look at it, real estate still hasn't reached its 2006 pre-recession peaks in a lot of places. What about stocks? Year-to-date, the S&P 500 is up about 5%. The bull market in the Dow has now run on for 9 years. It's still enjoying its second longest bull market run in history. Is the stock market overvalued? Well, investor margin debt hit a new record high. Basically, margin debt is money investors borrow from their broker to purchase securities. What about the cost of money itself? That is interest rates. Well, interest rates are up, and that affects real estate investors more than stock investors. The 30-year fixed-rate mortgage is up about 0.75% year over year. Now, the federal funds rate, which is tied to shorter-term loans, was basically at zero from early 2009 all the way until the end of 2015, but it's now at nearly 2%. They keep increasing rates 0.25% every few months, and it seems like every past rate hiking campaign like this has ended in a recession, so there's a big clue. After Bitcoin's wild high from late last year, it's settled down quite a bit, but it has become more stable. The price of a barrel of oil continues to tick its way higher. It seems to keep doing this sort of 2 steps forward, 1 step back thing with oil prices, so that it's now about double where it was from its lows 2.5 years ago. How about the dollar? Just like everything else, it rose too. It began rising in the spring, and it has since flattened out from there. So just about everything is up, up, up. But there's actually one asset class that I haven't mentioned yet that has not gone up. And if you believe in this asset class, it might now be at a buy low. I'm not sure, but I can tell you that this asset class sure is not a buy high right now. And that is precious metals. The 1-year and the 5-year charts for gold are both down. Same story with silver, platinum, and palladium, kind of the big 4 precious metals there. Now, remember that the metals prices are denominated in dollars. So if the dollar gets stronger, like it did earlier this year, then it takes fewer of those dollars to buy the same 1 ounce of gold, and gold will appear cheaper as denominated in dollars. And by the way, did you know that for years now, you have been living in a world where an ounce of gold sells for more than an ounce of platinum? Yeah, actually about 50% more. I think the credit card companies and vacation tour package sellers need to change the names of their top-level services from platinum plans to gold plans. So platinum plans should, in fact, now be the lower-tier plan. Now, I'm not a big fan of precious metal bullion because you basically pay closing costs when you buy and sell, and those spot price differentials, and gold and other metals don't have very good tax treatment, and there's no leverage. And the big one is that they do not produce any income for you, but precious metals are interesting to look at because they're kind of a proxy for these other things that happen in the economy, and gold is one of the few tradable commodities that has had value for millennia. Many will tell you that gold is real money itself, and your dollar is a mere currency. Now, macroeconomist Richard Duncan was here a few months ago to tell us about quantitative tightening, how the U.S. is basically on a money-destroying campaign. Well, just think about it. If quantitative easing, initiated about 10 years ago, if that was about inflating asset prices, and there is a lag effect, and we're still coming off that, then what is the likely outcome of the opposite thing, quantitative tightening? Well, it's probably going to make asset prices go down, but again, there is a lag effect there. Right now, the Federal Reserve is raising rates and shrinking its balance sheet, which is the opposite of what they did to inflate asset prices. So it's reasonable to think about the equity on your balance sheet. If the prices of your stocks and real estate fall, so does your equity. And this all begs the big question, how can you protect your equity from a bursting bubble? Well, aside from selling everything and sitting in cash, which actually has its own risks, one strategy for you is to simply reposition your equity into assets that are less affected by leverage, like those more stable geographic markets that we talk about, Dallas, Memphis, Indy, and much of the Midwest and South. I think that the stable markets are in pretty good shape. So that's really one way that I think you can behave today after all those indicators, all those market levels, and all those signs. And, you know, lately we're seeing some signs of cracks in some higher-end coastal markets like Manhattan. price points are becoming challenged. Some high-end assets are sitting on the market longer. Is that just a blip? I don't know. It might just be too soon to tell. But that's kind of a quick all-around evaluation of where we've been, where we are now, and what you can do about it. Now, one thing that happened between episode number 100 and episode 200 here is that I was named to the Forbes Real Estate Council and became a writer for Forbes. And when that happened, you didn't see any change in my stripes on this show. I'm still abundance over scarcity. I'm still financially free beats debt free and everything else. But more recently, something interesting happened. I wrote an article that I wanted Forbes to publish called Why Your Return from Home Equity is Always Zero. Now, I didn't really know if they would want to publish that one. It might just create friction with some groups, but they just could not deny the logic. So last week, and I give Forbes a lot of credit, they did publish Why Your Return from Home Equity is Always Zero, and more people read it and shared it than any other article I've ever written in my entire life. So if you're a Get Rich Education newsletter subscriber, I sent that article to you, so you got to read it too and see that the return from home equity is always zero, printed in Forbes, which was awesome. Also, since episode 100, I've launched Get Rich Education TV because some of you told me you would like to learn through videos. Now, some of those videos include more technical information, like I show you what an IRS Schedule E form looks like and how you ask an apartment building seller to see his Schedule E before you make your offer. And then we have other videos that are more mindset-based. In fact, let's let you listen to the audio portion of one of those videos from getricheducation.tv. This is called 7 Minutes to a Wealthy Mindset. And this right here can be a revelation to the family saving money by eating Kraft macaroni and cheese for dinner. And then I'll come right back after this video. Enjoy listening. Look, this could be the most valuable video that you've ever seen in your life. Do you want wealth? Well, then you must change your vocabulary. Being wealthy is a choice. Hi, my name's Keith Weinhold, and I'm a writer for Forbes. The first time I read that being wealthy is a choice was in a Robert Kiyosaki book, and I remember my reaction to reading that sentence. I thought, well, that can't be true. It's just not that simple. You can't just choose. That's what I thought to myself. And years later, I've discovered that Kiyosaki was right and I was wrong. Being wealthy is indeed a choice. So remarkably, I learned that it begins with something as simple as the thoughts and the vocabulary that you put into practice. I've kind of deconstructed this. The thoughts that you put into your head, those thoughts are reflected in the vocabulary that you choose to employ. Your thoughts become your words. Your words become your actions. Your actions become your patterns, and your patterns really become who you are. Well, because words are a pivot point between your thoughts and your actions, the words that you use can have a surprisingly profound impact on obtaining wealth. I'm going to give you 5 examples of what I consider to be scarcity mindset phrases, and then I'm going to give you 5 abundance mindset phrases that you should go ahead and use to replace the scarce phrase with. If you use a scarce vocabulary, it will be impossible for you to obtain any substantial wealth. So let's run this critical check on your lexicon here. Which of these are you most likely to say or think to yourself? The scarcity phrase is, I want to be debt-free. Well, the abundant phrase is, I want to be financially free. Look, no one shrinks their way to wealth. Who got rich by working hard over years to pay off their mortgage or retire their car loan? Nobody. One acquires wealth by building many durable passive income streams. In fact, one often embraces good debt in order to do this. Now, good debt, that would include debt perhaps that your rental tenant pays down for you while they're providing you with a passive income stream at the same time in your rental property. The second scarcity phrase, and I can't stand this one, it is live below your means. The abundant phrase is expand your means. Look, the entire point of acquiring wealth is to live well and give well. Letting a coupon app on your phone dictate where you eat dinner again, that's not going to build wealth. Read about how to maintain a great credit score, or do a 1031 exchange, or go ahead and attend a real estate investing seminar. Secure some big investment wins, and then after you have those wins, plan on an unforgettable vacation to Europe. So focus on production, not reduction in your life. The third scarcity phrase is, I must work hard, or even, I must make my money work harder than me. Yeah, that's actually scarce. The abundant phrase is, I must make other people's money work hard for me ethically. It can be a stunning revelation to you that getting your money to work for you will not create wealth. Well, the good news is everyday people like you can employ the money of others. In fact, you can do it ethically 3 ways at the same time with something, again, like real estate. You use the bank's money for the loan and leverage. You use the tenant's money for your passive income stream. And then the third way you use other people's money simultaneously is you can use the government's money for very generous tax incentives at scale. Now you have the real ingredients for wealth creation. The fourth scarce phrase is compound interest is magical. The abundant phrase is leverage is magical. Look, at any reasonable rate of return, compound interest only has a chance of providing an adequate retirement for you, just maybe, and only when you're older, and never wealth. Leveraging the use of other people's money ethically means you achieve your return on investment from the capital of many people, not only your own. And then the fifth and the final scarce phrase is, let's build a budget and stick to it. The abundance phrase is, let's make a cash flow statement. Look, budget, that implies frugality, scrimping, saving, cutting back. Well, you can only cut your lifestyle so much to the downside, and then when you do, you're living worse anyway. Skipping another vacation, skipping another experience. That degraded quality of life, that's time that you're never going to replenish. Instead, build multiple income streams over here and increase your cash flow. Your income potential is unlimited. So scarcity versus abundance, that begins with your thoughts and your words. I mean, come on now, really. Which life would you want to design for yourself? One of scarcity or one of abundance? You do actually have a choice in this, and your vocabulary will go on to shape your actions. A rich person digs for gold, while a poor person is concerned with the cost of a shovel.
I'm back, and I hope that you like listening to that video. Watching the video really brings it to life, though. I think that particular one is one that will really help those that are trying to think differently, like the 3 factory worker guys in the small town that don't think they're ever getting out of their town. You can see videos like that and more, again, it has its own URL. It is getricheducation.tv. I'll put a link to that exact video in the show notes for you. Well, we talked about the levels that various markets are priced at on this show. Now, what do you think those real estate prices today are doing to real estate appraisals? For income properties, I'd like to know what percent of appraisals come in too low, what percent come in exactly on the contract purchase price, and I want to know what percent of appraisals come in high today. Well, next week on the show, I'm going to bring in none other than the president and CEO of the mortgage company that does more investor property loans than any other mortgage lender in the entire nation, and ask them those questions about what percent of appraisals come in low, right on, and what percent come in high. And just overall, we're going to talk about what it takes for you to qualify and buy an income property today. Percents down, interest rates, credit scores, reserve requirements. We're going to get a refresher on all of that because those things change a lot. Down the road,
what is the most money that I ever made in 1 year from my day job back when I used to have one? I'll tell you that highest amount that I ever made that I personally earned from my day job. And I'll tell you that amount right down to the nearest $1,000 and why that would even matter to you at all, other than it just probably being interesting for you to hear about. I'm also making a gift for you. Yes, I'm just having a little gift made that I'm sending to you, our Get Rich Education newsletter subscriber. And I think you're going to say, hey, that's kind of cool. I've never before seen this real estate investing resource all in one place before. And again, you can subscribe to our newsletter for free at getricheducation.com. While you're over there, be sure to check out Get Rich Education TV as well. Until next week, when I'll be back to help you build your wealth, though you might quit your day job, don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
If you want to retire in 5 years or less through real estate investing, then pay close attention as I'm about to share my proven recipe with you. This is Brad Sumrock, and I've taught thousands of people just like you how to replace their incomes, quit their jobs, or simply have more income and freedom than they ever thought possible. And we do this by investing in apartment buildings. After starting with no experience, I managed to pocket over $1 million in cash and retire from my 17-year corporate job after only 3 years of apartment investing. And I have hundreds of successful students that have had similar results. If you want to get out of the rat race or simply have more income and freedom in your life, then investing in apartment buildings might be the answer for you. Visit our website at bradsumrock.com to get more information about our upcoming training events. That's bradsumrock.com.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.